Is the bullish engulfing pattern actually good? Should you put your money on the bullish engulfing candlestick pattern? Well, to find out, why don't we test the bullish engulfing pattern 100 times, just like we tested other trading strategies multiple times on this channel. Check them out, and subscribe to the Trading Rush channel, because the last thing we want to do as a trader is trade on a strategy that doesn't work in the long run. The bullish engulfing pattern is a 2-candlestick pattern, where a small red candle is followed by a big green candle that completely engulfs the body of the previous red candle. Bullish engulfing is a reversal pattern, and it is used to find the reversal in a downtrend. In simple words, the bullish engulfing pattern is mostly used to find the entry and exit in a trading strategy. Now, some traders who trade on daily and higher time frames like to trade using the candlestick patterns alone. But why is this candlestick pattern so popular and trusted by many traders? Well, to understand that, we will first have to understand how the engulfing patterns work. Since candlestick patterns are watched closely on the daily time frame, let's say on the daily time frame, a stock or a forex pair made new lower lows 4 days in a row. Most people who trade on the daily time frame will see this as a strong selling pressure. The people who are selling are happy, and many buyers are not ready to buy after sellers took over the market 4 days in a row. Now, if a green candle opens at or below the closing price of the previous red candle, and manages to close above the opening price of previous red candle, it will indicate a lack of selling pressure on that day. It means that the sellers who were selling for 4 days in a row are no longer interested in selling, and the buyers are more interested in buying. When this happens, the next few candles that follow will have a higher probability of moving higher. Now remember, the bullish engulfing pattern is a short-term pattern. What this means is, when the bullish engulfing pattern occurs, price has a higher chance of moving upwards for a short time period. That's why it is usually used as an entry signal pattern in a trading strategy that can predict long-term trend direction. For example, let's say in an uptrend, you are waiting for the price to touch your support area. Now, if the price touches your support area, you cannot immediately buy as there has to be a reversal confirmation. So instead of risking your money immediately, you wait and take a long trade when the bullish engulfing pattern appears. Now everyone is going to use the bullish engulfing pattern differently with their different trading strategies, but what I wanted to find out was how good of a pattern the bullish engulfing pattern really is on its own. Since candlestick patterns are short-term trading patterns, there are traders on daily and higher time frames who hold the stock or a forex pair only for the next 1 or 2 candles. So to find out how many times the price actually went up the next day after the engulfing pattern, I tested the bullish engulfing pattern 100 times, and here's what happened. Number 1. I added the 200 period moving average to filter false signals, and even though the bullish engulfing pattern is a reversal candlestick pattern, many people will use it in the strong trend to find the reversal of a pullback. When the price movement was not choppy, the price did go in the upward direction on the next day. Number 2. The probability of price reversing is higher when the engulfing pattern occurs after more than 4 red candles in a row. Furthermore, the price has a higher probability of making a big move in the upward direction if the volume of the green candle is higher than average. You can check the volume trading video on the Trading Rush channel to learn more about volume and how it can make you more money. But sometimes price can make big move when the volume rises. This can sometimes lead to very big stop loss. If you find yourself in a position where the bullish engulfing candle is too big, it is a good idea to skip that trade as the candle has already made a big move in the upward direction. Also, candlestick patterns don't tell you where to put your profit target, and since the candlestick patterns are short-term patterns, getting a higher reward to risk ratio trade can be difficult. But if you can identify a strong support level in an uptrend, and take trade when the engulfing pattern occurs, you can achieve higher reward to risk ratios. Number 3. In an engulfing pattern, price only has to cover the body of the previous red candle, but if the engulfing candle covers the entire candle including the wick, the probability of the price making an upward move after the bullish engulfing pattern is a lot higher. So if you only take trades on bullish engulfing patterns, where the pattern is formed after 4 or more red candles, and the volume on the engulfing candle is higher than average, and if the engulfing candle is also covering the wick of the previous candle, you will have a higher chance of making a profit. Number 4. Now remember, I tested this pattern on the daily time frame and with the 200 period moving average. When we will use the bullish engulfing pattern with other trading strategies, for example with the alligator indicator or with the support and resistance areas, the win rate of this will be much higher than what we will get here. If we get a profitable win rate in this backtest, there is a higher chance that the bullish engulfing pattern will work even better when combined with another profitable strategy. For backtesting, I'm using the official Trading Rush app. It calculates win rate, profit graph, number of winners and losers in just one click. You can download it from the link in the description or from the Play Store, and use it to test and see how good the bullish engulfing pattern works when combined with your own trading strategy. If you don't have a working trading strategy, check out other videos on the Trading Rush channel. You will probably find a strategy that suits your needs. So after backtesting the bullish engulfing candlestick pattern 100 times, here's what I found out. It is said that the price on the next day on the daily time frame will make an upward move after an engulfing pattern occurs. And during this backtest, 54 out of 100 times, the price did make a move in the upward direction. It made an upward move 8 times in a row and failed to do the same 5 times in a row. What this means is that if you combine the bullish engulfing candlestick pattern with a decent trading strategy that shows the long-term trend direction, you will have a powerful entry or exit signal generator. The win rate I got here is the approximate win rate, and as we have seen after taking 10,000 virtual trades in the Why I Test Strategies 100 times video, we don't need the accurate win rate to find if a strategy works or not. We only need the approximate win rate, and money management will do the rest. After testing 100 times, we found that the bullish engulfing candlestick pattern is a profitable candlestick pattern. That's all. Like the video if you liked it. Subscribe and ring that notification bell to see more candlestick patterns tested 100 times, because you don't want to use a candle pattern or a strategy that does not work in the long run. And thank you so much for supporting the Trading Rush channel on Patreon. Have a great day.